Okay, cool, guys. I see the numbers coming up. So, thank you everyone for dialing in today. Appreciate the late evening. This is one of the first times I've done my webinar this time of the day. Normally we do it midday. Just important to note, these webinars are always recorded, so we will always upload. So if you do need jump off or you do need to head anywhere, don't feel like you're going to miss out on any of the information. These webinars are recorded. Now, today's session in the Wealth Academy is touching on Swiss banking. So, just a bit of background on Rand Swiss, a bit of background how we work with clients. For those of you guys who are clients, I'm sure you're very, very familiar with this slide. This slide, we unpack the sort of divisions that we work with within Rand Swiss. So the foundation of it was securities broking. That's where we started. And that's actually an area that's growing quite nicely. So I'm sure you guys will see two new faces in the bottom corner, Brett and Sean. They've actually joined us from IG and they will be assisting on the sort of securities broking side of the business, a wealth of knowledge between them. I'm loving the sort of interactions with them, learning immensely. And I think their sort of focus will be, expanding the sort of knowledge in the team and just, help from a front office perspective. Then the second division in the business is the managed solutions. Now, the managed solutions is an area where we utilize our Cat 2 side of our licensing. And the benefit with that is it allows us to have discretion on clients' portfolios and make changes as and when we see fit. The two sort of portfolios we run are the global equity portfolio that's run through Gary Boyson. That's starting to serve as quite a sort of flagship strategy within Rand Swiss. Got close to a 10-year track record now, and really trying to aim to be a nest egg for offshore capital. And the sort of newer portfolio, which is run by Viv Govender, is the AI portfolio. That's been performing unbelievably as you've seen this rally in AI just continue. And then the third division of Rand Swiss is the Wealth and Advisory. So this is still a fairly new division in the company. It's about 2 years old now. And the sort of aim we try and achieve here is we try to look at clients holistically. So we try to sit down with clients, understand, their risk profile, understand, what their aim is, what their, financial objective is. And from there, make a formal advice on where we think they should be allocating capital and how they should be behaving with their finances. Now, today's section is obviously going to be focused around wealth and advisory. That's where I sit. I'm one of the wealth advisors here at Rand Swiss, and it's an area I feel quite passionately about. From a supporting staff aspect, you can see we've got a huge, support staff in the back end. And also we've got outsourced analysts that we use, such as Anthony Clark and Pete Surfontaine. In terms of being independent and our sort of investment partners, I think what you will find with the wealth and advisory offering is that we're not limited to one sort of platform. We can recommend across all the likes. In my previous Wealth Academy episodes, we've been discussing all the different financial products out there, your retirement annuities, your pension funds, your tax-free savings. Now, when we did those sort of webinars unpacking all those different financial products, one of the things we never ever highlighted was, oh no, you have to use a 91 tax-free or you have to use an Allen Gray RA. Reason being is we're independent. We can do a blend of all the different product providers. Each one's have their pros and cons. It's quite a laugh. Every sort of strategy meeting we do internally, we always do a smarty box in which we rank who's the best product provider for different services. And each one of them have their pros and their cons. The benefit of being independent is we can use the different ones, depending on the client case, because each one is very useful in different circumstances. And I think the next bit of aspect around us is being in the media. Viv and Gary are very, very popular in the media. You often see them giving their sort of commentary on financial markets. And I feel that does almost just add a bit of a third-party vetting to us, because the sort of ideas and strategies we believe in, we share internally. We're also proud enough to go out to the media and share those, amongst everyone else. And I think almost just another sort of third-party vetting that we've done over the years is through the Crutham Awards. So I'm very, very pleased to see, because obviously it's a division I do feel very strongly about, that this year we have been ranked as South Africa's top boutique wealth manager. It's very great to see. It's like I said, it's a fairly new area of the business. It's only 2 years old. But I feel with the sort of track record of us being ranked as the best securities broker in the country, we decided to, make the transition into wealth. And great to see that Crutham does recognize the sort of work we've done in the last 2 years and does see us as the top wealth manager in the country. This is something we obviously now we've set a high benchmark for ourselves, so we are going to have to try to continue with that as time goes on. But again, I think these awards do just illustrate and support the sort of third-party vetting that our investment process, that we do offer. So when I first joined the company, I thought it would be quite useful to start a sort of Wealth Academy webinar. And the aim of the webinar series was to unpack all the different financial products out there. I remember when I first joined the industry, one of the most daunting things to me was all the different product names out there. You get endowments, you get living annuities, you get retirement annuities, tax-frees, offshore, local, and all these things have different tax planning, tax benefits, tax disadvantages. They also have huge estate planning considerations. And I almost want to make this series to shed light on what are the pros and cons to these different investment vehicles. How do they work? What is this tax structuring around it? What is the estate planning consequences if you pass away with these vehicles in your name? Now, we've done five. We've unpacked retirement annuities, living annuities, endowments, and tax-free savings accounts. And today we're unpacking offshore Swiss banking. Now, I almost want to say it's a bittersweet moment, but it's actually going to be the final bit of this, sort of webinar series with the Wealth Academy, because I feel we've unpacked the sort of core products that are available, to clients. But that's not to say it's done forever. These are recorded webinars, so they will always be available on our YouTube channel. So please go check, the ones that do interest you. And also, it's not going to be the last you're hearing from me, unfortunately. You will still be seeing my webinars because the sort of next thing we're going to be doing is something called Fund Focus. Now, I asked AI to design a photo of me interviewing different fund managers. This is what it came out as. But effectively, what I am going to be doing is we're going to be sitting down with the different fund managers and hearing what their strategies are, hearing, how they position themselves, in the market, hearing their views on macro environments, and seeing, how the different strategies can complement client portfolios. Again, with us being independent and with us always being eager to see what the different guys are, offering, we're going to be interviewing them. These are just some of the ones we will be interviewing, the likes of Satrix. We sat down with the management team about a month ago, and I'll be very honest with you, I find it so fascinating how they go about creating these ETF and index structuring. It's a very fascinating process how they go around doing it and the costing. That's on the sort of passive ETF basis. Myself and the team have been working very closely with Peregrine this week. We went to their offices, we sat down with the management team. They on the completely opposite side of the spectrum. Them being a hedge fund manager can go both long and short on different positions. We'll be sitting down with them. We'll be, putting that webinar out there so you guys can also hear more about their strategies from the team themselves. Coronation, we've got an excellent relationship with one of their distribution managers, Bernard Vessels, one of the most smartest guys I know when it comes to their strategies, great strategies, both local and offshore. Alan Graham, one of the biggest investment managers in South Africa. We're also going to be sitting down with them. 91, Stanlib, the list can go on. I've got way more to it. So that's going to be the second, sort of aspect in our wealth division, with Wealth Academy being done, Fund Focus is going to be the next. But let's focus on today's session, being Wealth Academy, and see where we are. So when we speak on Swiss banking, it always impresses me how over the years they've often, stood the test of time through world wars, through various, macro events. You look at 2008 global financial crisis, Lehman Brothers collapsed, one of the biggest US banks. Swiss banking, stood resilient throughout all this. Now, us being in South Africa, we are always quite limited. We've obviously got a great, financial and banking offering locally, but it is local still. And I think when you do think Swiss banking, you often think it's a very pricey, very exclusive, high net worth thing that it's quite difficult to achieve. And that's why I'm very, very pleased to, share our relationship with Swissquote and how that, can be offered to South African investors. So who are Swissquote? Well, firstly, Swissquote, they were established in 1996, and in May 2000, they listed on the Swiss exchange. So they've been around for a while. They've been around now for, 2 decades, listed on the Swiss exchange. We actually looked at their share price about a week ago, and you'll see very, very consistent growth over that period. They also listed, with FINMA. So they do follow the high Swiss banking standards, providing some security to investors when they allocate capital, knowing that their capital is safe, that there is, a very, very strong regulation framework, governing the sort of policies that they can do. And finally, they're truly a global partner. You can see these are all the sort of offices they've got, head offices based in Zurich and Geneva, but representation across Hong Kong, London, Dubai, Singapore. So a real, real offshore player. Now, how does a Swiss bank account then impact a South African investor? You can see from that previous chart there, South Africa wasn't even on the map. So how do you guys get exposure to it? How does it impact you? Well, fortunately, with us being a category two manager, we are able to recommend and offer Swissquote accounts to our clients. It's a very, very bespoke and niche sort of offering that we can give. Most South African advisors are not able to offer this because they don't have that Cat 2 licensing behind them. So now that we are able to offer these to South Africans, how does the tax reporting work? How does their estate planning work? With Swissquote being an international bank, they don't supply an RT3B or C. So what you will get is you will get a tax report on your Swissquote account, and you will then have to submit that through to SARS. But then from an estate planning angle, the benefit with Swissquote is with it still being a Swiss bank account, it will follow the wishes of your South African will. So unless you're a Swiss resident, so if you don't have any Swiss residency, if you do have a South African will and you do have a clause stating that you want to protect, the wishes of your offshore assets, once you pass away, your Swissquote accounts will follow the wishes, in your South African will. So again, this is obviously something that you would have to sit down with us and make sure it is structured correctly to make sure that once you pass away, the affairs are correctly in order. So let's dive right into it. Some of the banking services that are available through Swissquote. So Swissquote have this whole ethos of trying to bank differently, and they offer a fully integrated banking solution. One of the big benefits we've seen is the cash management offering, where you can make and receive third-party payments. So you'll see once you open up a Swissquote account, you get an IBAN number, and that IBAN number, allows you to it's effectively, like I said, an online bank account. So you then get your card loaded. You can get a virtual card. The virtual card comes at absolutely no cost. You can get a physical card, and you can also get like a sort of platinum physical card. I've seen it before. It's a nice metal card. You get exclusive airport lounges. That's sort of an extra benefit if you would want. You also do get flexible credit options. So should you want to take a loan against, your positions within Swissquote, that also is an option. So where do we think this fits clients' portfolios hugely is that it's more than just a brokerage account. The Swiss operate very differently to how pretty much the rest of the world operates, where if you think locally, most people have their bank accounts. You use FNB, Standard Bank. And then if you want to invest, you have to use a sort of asset manager, assets, platform, an Allen Gray, a 91. What the Swiss do is they combine those two together. So you get the banking facilities and the sort of investment facilities within one account. Now, where that's a huge benefit is that us being South Africans, we do obviously have an appetite to always, want to invest offshore. And I look at clients' accounts and I see they either do it in one or two ways. One of the ways is they use an offshore brokerage. They use an interactive broker. And it's great because you do get exposure to the market. You can invest, you can, buy different stocks, buy different ETFs. The downfall with it is it's purely a brokerage account. The second way South African investors go about investing offshore is they open up a FNB Isle of Man or Standard Bank Isle of Man accounts where they do get the banking facilities. The downfall with that is you only get banking facilities. You then can only sit in cash where you earn in offshore, interest rates of 2 to 3% at best. That's it. Whereas with Swissquote, you get the banking facilities along with all the custody investment facilities. A very, very important point to note with this is that banking facilities come at no cost. Now, when I say banking facilities, I'm not saying when you open the accounts, you have to choose which currency you want, because the best benefit when opening up a Swissquote account is the multi-currency account. So you get one IBAN number and 20 currencies within the account. So this is perfect for investors, if they're overseas and they want to travel. One of my good mates, a client of mine, he actually traveled through Europe and he had his Swissquote accounts and he was able to tap in the UK, then go to France, tap there, and then went to Croatia and was able to tap his card there. Now, the big benefit is that he had pounds in his pound. He had one account with Swissquote. He had a pound balance and a euro balance. And when he tapped in the UK, it got deducted off his pound balance. And when he was in Europe, he was able to, get charged in his euro balance. So the big benefit with it is when opening these accounts, you don't have to be stuck to one currency. You can have multiple currencies within the accounts, up to 20. And the big benefit is there's no cost for holding cash. So you can have £1,000, $1,000, €1,000, 1,000 francs. And after 1 year, that balance will still be there. There's no banking fees while you're sitting in cash. If you do want to sit in cash, there are some money markets options available where you can earn some interest. And also in terms of exchanging, you can, move money around. You can convert your dollars to pounds at any point in time. Although you can do this, our sort of recommendation as a house would be rather, going through the Investec CCM. Quick side note, Investec, CCM is a sort of product offering we have. It's very, very suitable for clients with rands where they want to externalize funds. And it's a very sort of complex process where you want to take your rands, you want to convert them to a foreign currency. We're able to facilitate that process through Investec CCM, where we can take, any sort of currency and convert it. Now, if we have to look at the sort of diverse asset classes available, I touched on how South African investors often use FNB accounts to, invest offshore, or a Standard Bank Isle of Man account. And the downfall with that is you only get cash returns. The benefit with a sort of international custody account is you don't have to be limited just to cash investments. So with Swissquote, what you will find, which is incredibly impressive, is that there's over 3 million products available. So you can invest in stocks, ETF, funds, bonds, structured products, even cryptocurrencies. So you get a huge range of investment options available. Like I said, 3 million. In terms of the different stock markets available, there's over 50. So pretty much every exchange is listed on Swissquote. You can buy precious metals, so you can buy gold, silver, and like I said, over 52 cryptocurrencies. Now, with that, there is a fee to hold these different assets. The sort of custody fee you would be paying is 0.15% per annum. Now, that is subject to a minimum of 60 francs per year. So if we worked it out roughly about 40,000 francs, you then pay 0.15. Any less than that, you pay 60 francs minimum. Now, even if you look at that 60 francs minimum amount, what is that sort of conversion when we think locally? If you have to, apply a rand sort of costing to this, based on, current exchange rates between, rand versus, Swiss franc, it would work out to be 1,322 rand a year if you have less than 40,000 francs in the accounts. Now, if you look at that per month, that's 110 rand per month to have a Swiss bank account with below minimum, sort of investment value behind it. That's cheaper than my Discovery Bank accounts. So I think the big sort of thing we looked at when we first approached Swissquote was typically you think Swiss banking is very expensive. And I'll be honest, we've chatted to clients who have got UBS accounts and they chat to the sort of banker that side. And just a phone call comes with a bill. The benefit with them is we've properly vetted them to make sure the fees are not going to hurt the clients at the end. Now, we speak on 3 million instruments available. And as exciting as that is, having the sort of unconstrained possibility to invest in pretty much any asset class out there, that does also pose a risk with sort of analysis paralysis, where we've seen many retail clients, see 3 million instruments available and they wonder, well, what's suitable for me? Is this appropriate? So one of the big things we're going to also unpack today is the different strategies that we assist clients with through this process. With there being 3 million instruments available, we try to sit down with the clients and see what is best for them to invest in across the different asset classes. With us having the track record of being the best securities broker in the country, I feel this is really where our value comes into play. Now, if we look at the sort of risk profiled investments out there, this is our summary of those 3 million investment options out there. And you'll notice that these investment options range from very, very low risk, offering a bit of a lower return, all the way up to very high risk share portfolios offering a sort of higher return out there. Now, I will unpack all of these further in like a sort of fund focus session, as we, dive deeper. And, for those of you guys who are clients of ours, you'll see we try to do a very, thorough due diligence on you to understand where's your risk profile and where would you lie across this tier, because there's not one, size fits all. Each sort of strategy is appropriate for different clients and different needs. But if I quickly run over them, and we'll start from the bottom, from a low risk, low return aspect, there's money market. You can invest in cash. You can get the sort of money market linked returns. Now, it's not to say that's all there is from a money market aspect. There's many different ways you can structure it. So Coronation, and I mean, you'll see it more when we sit down with Bernard and unpack that strategy. But Coronation have a great way in which they've launched their money markets or their income-based fund. Because what they've done is they've made their fund accumulating. So what that means is that when you earn interest, when you sit in the Coronation Strategic Income Fund, that interest payment doesn't get paid out to you as an investor as interest. It gets reinvested and you buy more units in the fund. Now, the big benefit with that is the tax, because all of a sudden you aren't getting taxed in the form of interest, which for most investors is at the 45% tax rates because it falls within your marginal tax rates. You're getting taxed as capital gain, which if you look at the effective CGT rates on the highest aspect is 18%. So all of a sudden you can sit in a money market instrument and not get taxed 45%, all of a sudden get taxed 18%. So a huge sort of tax saving in that aspect. If we move slightly up the risk curve to a more sort of private credit aspect, this is a very, very exciting world, and it really does excite the team because it really unlocks the sort of untapped potential to get very, very stable returns, but offer you a much better coupon than what you would get at the bank getting a money market return. I'll do a bit of a deep focus on one of the private credit funds we do like. The next sort of aspect is structured notes. Now, this is something that is hugely popular in Switzerland because they obviously have had huge amounts of period, where they did have sort of negative interest rates. So structured notes are an incredibly popular vehicle because they can offer sort of fixed coupon payoff profiles, to investors. Internally, we design these structured products ourselves. So we've got relationships with most of the big trading and structuring houses across the world. And we often ping the providers and see, what sort of pricing is. We do have a structure closing on the 11th of August. Gary and Viv did a great webinar unpacking how these structured notes offer very, very useful, segments in clients' portfolios due to their relatively uncorrelated return profile. So there is that, YouTube webinar available. But I mean, if you guys do have any questions, please reach out to the team. We would love to obviously unpack it further. But we do structures about once every 2 months. So we just design these structures in-house. We get pricing from all the major banks, and then we issue those structures to our clients. Next up, we get the sort of passive market trackers. These are your, funds and ETFs that track the markets. We obviously build bespoke ones for clients depending on where, what they want to try and achieve, depending on their sort of regional exposure. We don't want to be overexposed to one sort of aspect. But yeah, we've also got a slide unpacking the sort of passive market trackers out there. And then finally, share portfolios. You can buy direct shares within the Swissquote accounts. So you're unlimited just to sort of funds and ETFs. You can buy shares, like I said, across 50 different exchanges. So if I want to do a bit of a deeper dive in just one of the strategies that we feel are incredibly, useful and incredibly interesting to the sort of client base, and that's a deeper dive in the private credit space. So Remember, what is Swissquote? Swissquote is purely a bank and a custody account, which offers, a great amount of banking features and offers custody for investment assets. Now, that's not necessarily going to make your money grow. That's where we almost step in as the wealth managers, as the securities brokers, and we say, what are you trying to achieve? What is your risk profile? Now, from that previous slide, you can see we've got pretty much investment options across the board, depending on what you want to try and achieve. This is more for the sort of investors that are looking for some stability. They don't want to take on heavy sort of risk. They want to be in a more stable return profile, but they want to be sitting in cash, giving 2 to 3%. This is quite an interesting solution. One of the ones we like to offer to clients. So this is the Prism Income Fund. So it's what effectively, who are they? So Prism is a global company. They've got offices in Cape Town, but also offices across London, China, and the US. And what they try and invest in is they try and invest capital in private markets across developed and emerging markets. And one of the things we've liked about their strategies is they very, very uncorrelated to the general market. Reason is because they're in the private space, they don't, face many of the sort of challenges that, the public market faces. We've sat with the team, they've got a global team of analysts, and what they effectively do is they do private credit. So they're able to lend money to, various different companies that aren't listed, and they can, almost give that sort of interest to the investor in the end. And how they go about doing it is both in a quantitative and qualitative way. So they are able to sit down with many different companies across the world and offer them financing. In terms of the financing, it's very, very short duration loans. So the average loan is about 18 months. And the number of companies that they offer financing to is immense. So at the moment, they've got 42 different companies that they offer financing to. One very, very important point to note here is that this fund is not Section 65 approved. So this is something we would have to do in our Cat 2 sort of management aspect. So this is something we do using our Cat 2 mandates, which is incredibly important. Now, if we look at the sort of geographic and sector splits of the different companies, you can see they're very, very well diversified from a sector aspect. They don't invest just in sort of one sector of companies. The companies that they offer funding to is diverse. They offer from financial services to consumer staples to information technology. And even from a regional aspect, the companies are not based in just one region. They lend money to companies across the world. So the benefit for investors is that investors can almost know that their capital is well diversified across many different sectors and many different regions also. Now, how has their sort of return profile looked? As I mentioned, they try to offer very, very uncorrelated returns in a very, very steady profile. If you sit down with the management team, sort of capital preservation is one of the biggest things. And in this case here, you can see why. When the fund launched back in 2009, you can see the purple line is the Prism Income Fund, and you can see their sort of steady return profile since their inception, offering an average return of about 7.6% in dollars per annum. They have got multiple currency accounts, so you can get a USD version, a pound version, a euro version, or Aussie dollar version. What's incredibly interesting is if you compare it almost to the cash benchmark, which is that sort of light gray line, over that period, huge outperformance by taking on that sort of private credit, sort of asset exposure. If you have to compare that to a sort of equity market, which faces the sort of market noise, you can compare to the MSCI, which is the sort of black line in the background. And you can see, although it's not meant to be a sort of equity-like portfolio, the sort of stability in returns is what we aim to achieve here. Now, these are just one of the sort of private credit funds we've got relationships with, and these are the sort of investment options that are available to investors when they use Swissquotes, because you're not limited to funds that are Section 65 approved. When you invest with Swissquote and when you use our Cat 2 mandate, you all of a sudden have you all of a sudden have exposure to these sort of funds, which wouldn't normally be available to South African investors just using a Cat 1 advisor in a way. Now, if we have to almost dive higher up the risk spectrum, if we have to, jump into sort of passive market trackers, One thing I do always appreciate with our client base is they're very, very educated investors, and they, they do have a great interest and appetite for sort of ETFs and tracking the sort of general markets. So this is one of the sort of ETFs portfolios we have. It tracks many of the big based indices out there, like I said, diversified across the different regions. Now, when it comes to offshore ETFs, one of the very interesting things we found about them is that they've got scale behind their names. So one of the big reasons we prefer offshore ETFs versus the local ETFs is the pricing. Now, by no means is this, almost a shot at Signia or anything like that. I'm a huge fan of Signia. I've got lots of, their funds in, my strategies, in our client strategies. But one thing you'll see is when it comes to the pricing, if you have to go with the biggest investment managers out there, you get much better pricing. So if you have to look at two S&P 500 ETFs, one of them being Signia, one of them being Vanguard. The Signia one is made available to South African investors. You can take your rands, you can buy a Signia ETF, and you track the S&P 500. And the benefit is of that is you're able to track, US-based index at a very, very low cost at just 20 basis points. The downfall is that there are more efficient ways to do that if you go in the global market. And if you compare to the Vanguard S&P 500, you're able to track that exact same index at 0.03%. Reason is that if you look at Vanguard's sort of market cap, they've got, you know, trillions behind them. Signia don't have that sort of scale. Now, again, it's not a shot. Signia, it's not to say that, they're tracking the index and they're offering it to South African investors, through the likes of a tax-free or an RA. But when it comes to tracking these sort of ETFs, you want to be partnering up with the biggest players out there. And that's where Swissquote does offer that. By being a Swiss bank, you do have exposure to the biggest asset managers in the market. And when we're saying biggest asset managers in the market, we're talking global asset managers. We're talking the likes of Vanguard, BlackRock, State Street, Fidelity. These are the sort of managers that you can get exposure to through a true offshore platform. And that's one of the things that I think our clients will find particularly interesting when it comes to trackers and ETFs. You want to be buying it in the most efficient way possible. And, finally, one of the ones that holds, core to us is share portfolios. This is something the team is exceptionally qualified in. The benefit with Swissquote is, as I mentioned, there's over 50 different exchanges. So you can buy stocks across the board. It makes it very exciting. If there's a stock you're quite passionate about that you think is interesting, you are able to include that in your Swissquote accounts. Now, again, we can do that on a sort of private broking basis, or you can use one of our flagship strategies. So like I said, we have got two. We've got a global equity portfolio and an AI portfolio. I'm going to do a bit of a quick summary of our AI portfolio, just one of them. This is a strategy that is available through Swissquote accounts. It's done, it's ran by Viv Govender. He's the PM on it. And the whole philosophy within this sort of strategy is we think that AI is going to be revolutionary. And if it is revolutionary, you want to almost be following what we call a paradigm shift in investing, where you don't rebalance in a way. Why we say that is if you think back to the dot-com bubble, if you bought 20 shares, but of those 20 shares, Amazon was one of them. Even if all those 19 shares, went to zero and you just hold Amazon up until today, you would have a very, very successful portfolio. The same sort of thinking applies with this AI. We think it's going to be revolutionary, and we think when there is a winner, there's going to be a clear winner, and we don't want to be trimming off that winner to almost not rebar the losers, not to say the other ones are performing badly, but you don't want to be trimming off that winner, because when there is one winner, that will be a very strong performer in the portfolio. If we just give a bit of a breakdown on the sort of performance for it, it's performed exceptionally well. So the benchmark we compare ourselves to is the S&P 500 Equal Weight Tech Index. And Viv is very pleased to see he's beating his benchmark by quite a margin. So these returns are USD focused. It's a USD portfolio, so it can be custodied in your Swissquote account. If you guys would like to see a bit of a deeper dive in it, Viv recently did a webinar where he unpacked it. But again, feel free to call us. One of the members of the team can just unpack it in further detail. The fact sheet also is available on our website. Next up, we've discussed almost the different asset classes available and how they and how the sort of different investment options available to investors. Now, the exciting part is you can invest in all these different assets, but the benefit around is you can also take credit on these assets. You can, Swissquote is a bank account, so you can take a credit facility on it. So what Swissquote offers, they do offer what's known as a Lombard loan. They make the comments where the L stands for liquidity. And effectively what a Lombard loan is it's a loan in which you loan against the assets. So there's the collateral. So if you were to buy the AR portfolio that Viv runs and you have $100,000 in there, you would be able to loan against the $100,000 in that security portfolio. Now, again, where that does differ is that many different brokerage accounts do offer these sort of loan facilities. The difference is that if you use a brokerage account for a loan facility, you have to buy other financial instruments within that account. With Swissquote being a bank, they do offer credit solutions. So you can loan against your portfolio and you can get that, that loan value actually paid out in cash. How they go about pricing the loan is they look at what's the market rates, what's the interbank rates, and then they do add their margin. Now, in developed markets, the sort of, the interbank rate is much lower than what we have here in South Africa. So you can see all the different rates in the slide here. What is important to note is we do also get bespoke pricing. So this is their sort of headline pricing that's available on their website. With us being, a partner of Swissquote, we do actually get discounts on that. So the pricing illustrated here is not necessarily what you would get if you had to go through us when getting these loans, if it was to, interest you, if you want a loan against your portfolio. When it comes to the loans, what is the sort of loan to value ratio that you're looking at? If you're looking at shares and equities, you get up to 70% of the loan, of the security value that you can get as a loan. So again, the big benefit is you can have your share portfolio. If all of a sudden you need the cash, you can loan against the shares and use the cash for something else. If you have to go with something a bit more defensive, obviously shares have a bit of a volatility tilt around it. You can also loan against, your bonds, and there you have a much sort of higher loan to value ratio being up to 90%. Now, finally, how do you view your Swissquote accounts? What's the ways you can assess it? So Swissquote do obviously have a website. You can view your account at any point in time. You can also ask us for account statements. We will share those with you at any point in time. And then finally, you get an app. I must admit, I've been using the app recently. It is a game changer when it comes to one, tracking markets, when it comes to two, tracking your portfolio. It's an incredibly, useful app. So these are some of the screenshots available. Our sort of clients will have a bit of a better face when it comes to it because it'll be on their phone. But effectively, the moment you open the app, you get a bit of a worm chart on how your performance is doing. You can see over what period, what is the sort of market returns over a 1 year period since inception? How has your portfolio performed over the last week? You can check all the different assets you've got in the accounts, the crypto, you can see the buying power you have. So you know that if you are traveling, in America, how much US dollars have I got to spend? And remember, you can't spend using you spend using your cash balance, but you can move that cash obviously around across the different currencies. You also do get a free virtual card. So you can load that on both your Android Pay or Apple Pay. And from there, you actually get a card that can make payments from your phone, or you do get a physical card. You just chat to us. We will order the physical card for you. And then you have your physical bank accounts, a physical bank card, which you can tap. You also, able to track markets. So you can track different indices, different cryptos, different shares. You can make watch lists. One of the things I found quite interesting, one of the new things they've done is inspiration, where they share the different trends happening in markets and they share the news stories on that. Again, with it being a bank account, you can make payments. A set of clients we have, their daughters studying overseas. They're actually studying in Lithuania. We opened up a Swissquote account for her. She uses her app for the day-to-day spending, and then every time she needs to make a payment to the university, she can actually make a third-party payment. She can also receive third-party payments from different jobs that she does overseas. You can also set up debit orders with this. The big benefit with it is that it does still offer all the banking facilities that you would get locally, except you do have that sort of Swiss elegance around it, and you do still have the custody aspect around it. You also do get quite a, deep heat map. If you want to track different indices, different stocks, different sectors, you can then get a bit of a deeper dive in it. So what now? If you are interested in Swissquote, first step, please guys, give us a call. We're more than happy to sort of unpack the different strategies out there, see if this is an appropriate account for you, assist you with the setup. And if this is something you want to go ahead with, what you'd have to do is open an account with Rand Swiss. If you go on our website, there's the open an account block, fill in your details. We'll get the mandate. We'll then be able to, chat to Swissquote, set up your account, get that setup process done. And then we will call you and discuss a time where we can come through and sign the Swissquote forms. I will be very honest with you. They are, I don't want to say old school. It's because unfortunately we are grey listed, but they do require paper-based signed forms. You do need wet ink when signing these. And the reason is with South Africa being on the grey list, they do need us to vet the clients. And that means we do have to sit with the clients and meet them face to face. Hence why there does need to be a paper-based signature for these forms. But it does add a bit of a sort of nice story to tell, where what we do is we meet with the clients, we explain the Swissquote accounts, they sign the forms. From there, we courier through to Swissquote. Account openings usually do take 2 to 3 days, so a fairly quick process. Sometimes there is some due diligence that is required, but typically it is quite a quick process. They've got a great front office team that assists. So thank you guys for jumping in. I hope this does almost unpack the different offerings available in the offshore space and unpacks the sort of different and the benefits around the Swiss bank accounts. I do see there are some questions, so I'll jump into it. And please, if you do have any questions, feel free to ask. So the first is, will Swissquote do offshore wills? Now, with Swissquote, they don't do offshore wills. They aren't a fiduciary partner offshore. So we do have fiduciary partners across many different jurisdictions. So if you are Swiss residents and having a Swissquote account obviously will impact your estate planning affairs, we can put you in touch with some fiduciary partners overseas that can help with setting up that will. But no, they don't draft those wills. We also can assist with adding a clause in a South African will that can, speak on the custody of your offshore assets. The next is, what is the minimum funds you need to keep the accounts open? The answer is zero. You don't need anything. So we can open up these accounts for clients with a zero balance, and we can keep them open. So we don't particularly like doing it, but we can, have some clients do want, an account just to, have, and they can open an account with zero balance, and there's no cost to it, because when you sit in cash with Swissquote, there isn't a cost. So the only time there is a minimum is when there's the minimum fee of 60 francs a year. And other than that, there's no minimums for the accounts. Then the next is, do we make use of ETFs? Their liquidities seem to be lower than US-based ETFs. So with regards to the ETFs, they do use various different ETFs. We're not limited just to one sort of jurisdiction. So we can get ETFs in US, we can get ETFs across Europe. Like I said, there's over 3 million instruments available. So you aren't limited just to sort of one jurisdiction. But yeah, guys, thank you so much all for dialing in. If there is any further questions, please feel free to reach out to the team. We're more than happy to assist, and have a great evening ahead.